Chipotle Mexican stock is down 50%, but it is a good business and therefore this is getting interesting. I look at what Bill Ackman has to say, and he is really praising the company. He has been a long-term investor. He says that they will return to growth. Actually, we'll see later they are still growing, and therefore this might be an interesting opportunity to invest in. He says that same-store sales declined because that's also reflecting a challenging 11% prior year comparison. Lower income, less macro, so things are getting worse on that macro. However, they are still growing, new ideas, they are growing across the border. They will target new 7,000 locations in America, Middle East, Mexico, and things like that. So the situation is the following. Difficult comparables, the macro environment is weakening. However, if you have a long-term growth focus, over time, that should benefit your investment. And if I look a little bit at the earnings, despite the same-store comparable declines, revenues are still growing as they are still investing in growth. If they have the money to invest in growth, that means that these earnings might grow even more in the future. And the outlook is there for, let's say, declines, single-digit same-store sales, still growth from their investments, with opening 350 to 370 new stores. What's that? 5% of growth on top of the current, let's say, position. And if I look at the numbers, doing well, good earnings, some buybacks, so that's also positive. I look at the liabilities, they have no debt. They have lease liabilities for the restaurants, but that's practically no debt. If you close down the lease and liability, it's not something that costs. Then we have a lot of repurchasing, and this is what I like. When the stock goes down, you double down on the repurchases. 1.6 billion, likely 2 billion going in the trailing 12 months. And you can see here, it is a growth story, the profits are growing, everything. And of course, after this staggering growth, there have to be some, let's say, downwards. This was the Salmonella scandal, but then it still takes up. And that's also what Bill Ackman is sharing with us. We're looking at the cash from operations, capital expenditure, and that's a high return on investment business, which also leaves 1.5 billion for buybacks. And they have pushed it to 2 billion the last 12 months. 2 billion, that's 5% return just from buybacks, all else equal, no growth. If the company still grows at 7%, that's a good return. If you look at the stock price, one could say we are just back on trend. So 5 to 7% growth long term, 5% buybacks, that's a 12% long term return. And what also tells me we are back on trend, if we look at Bill Ackman's, he bought them during that crisis, Salmonella, but he has been mostly selling and trimming his position over time. So he is praising the company but also selling it because it was likely overvalued. Now with the crash, you have a fairly valued good business. So the buybacks are there, 2 billion, 1.5 billion likely sustainable, that's 3.5%. The growth, 3% from inflation, that's 6, 7, 3% from their investments, 4%, that's 10+% growth return already from this level. If I put that on my value investing quadrant, so a 10% reward, there are still some macro headwinds, so I'm putting it at medium, let's say, risk here, a little bit more than totally no risk. But I'm going to put this on my watch list, that's why I put it on the quadrant. If you buy now and then for whatever reason, recession, it goes down, you can then double down. They will be doubling down on the buybacks, which means that the likely return long term here is positive. That makes it an interesting. Of course, I, as a son of a value investor, I always look for those bargains, a P ratio of 12 on this, still growing. Then I might add it to my personal portfolio. I'll be looking to add it to my diversified portfolio as the situation develops, but let's keep watching it here on YouTube. Thanks for watching. Let me know what you think in the comments.